So, are you a federal employee and you're getting ready for retirement? Today, we're going to go over how to prepare for retirement and what to do with your TSP. These are things that you need to know and start researching now before you put in your retirement paperwork. Really take a look at your expenses. You can get your retirement estimate from RSSO and then use the EAP budgeting counselor to see what your income gap will be once you retire. Some of us have an idea of what our budget will be like, but the reality of the smaller retirement income is going to hit you a lot harder than you think. And if you have debt, really take a look at what you can pay off and what you can pay down. Maybe even do a cost benefit analysis, your TSP and your retirement. What does that return look like as far as your interest rate, and then what you're actually paying for with your debt interest rates. I had to make that choice and pay down and pay off some of my debt. So by getting rid of those higher expenses, it's made it a lot easier to live off my current retirement income. Make sure that you submit your paperwork well in advance, more than the 90-day time frame. Perhaps it was the DRP and the VERA and a lot of people exiting in 2025, but that is something that you need to make sure that you have the income and also some cushion to be able to sustain you during that time frame. You want to make sure that you can actually meet your expenses. And if you're not, what are you doing right now to prepare for what you will do next? I've seen some people, and this is something that I would recommend, take some time off. I got a chance to do that. I have seen some friends do the same. You guys have worked really, really hard, and now it's your time to just kind of take a step back and reset. If you are healthy, do that bucket list trip. I really encourage you, because I have seen people that waited until their retirement, and some of them, they waited too late and they weren't healthy enough to be able to do it. Some of them tragically passed away shortly after they retired. Figure out what's the next thing that you want to do. This is your chance to create your purpose income versus just a regular W-2 job. And then also understand your distribution options. I'm talking about your Roth and your traditional IRA. What are you going to do with your tax deferred and your tax-free retirement? Now, the reason I'm bringing up where you want to put your distribution, there's tax implications if you do not handle your TSP account correctly. I've heard of some people either cashing out and they didn't realize that if you're below 59 and a half, because there's early withdrawals that will apply. And then there's also with tax withholdings that you're going to incur. If you're struggling with your finances and you haven't quite retired yet, you can actually do a hardship withdrawal with pre-retirement. You are looking at possibly going into your TSP and you're not able to take a loan. Now, think about this option before you tap into it. With the financial hardship withdrawal, you have to qualify. There's a questionnaire that you have to complete, and you can do it by phone or online. I found online was easier. I didn't do it. I just kind of went through the process to see what that would look like. That way I can share that with you. I don't have access to do it right now because this is something that's only available in pre-retirement. You can see that in your TSP when you log in. So you can initiate it and then answer the questions. It's going to determine whether you actually are in a financial hardship. It's going to ask the reasons why. If you didn't take this withdrawal, will your net worth be below zero? If you're married, that's also going to lead into you putting in your spouse's information, and they will send a document to your spouse for them to sign. That way, they're aware of the withdrawal. I'm sure you've heard about horror stories of people going through divorce and spouses moving their retirement funds around, and that's possibly the reason why that's in place. Once that's signed, the other portion you need to put in is, so how are you going to fund it? Within our TSP, we have a traditional IRA, which is tax deferred, and then we also have a Roth contribution. You can specify if you don't want to pay taxes, you're still going to pay the early withdrawal, especially if you're below 59 and a half, and how that's going to allocate. Run the numbers and run the different scenario before you go ahead and submit it, because you're going to see like If you are pulling from your tax deferred, you're going to have to pull out more to actually meet the income need that you want, because they're going to include 10% penalty, but also withdraw your federal income tax. The website says that you can change that withholding option to 0, but when I was going through the options, I didn't see that. The other option is pro rata. You just put in the information of what you're looking for, and they're going to equally divide it by percentage of allocation that you have within your TSP. They're going to pull a certain amount from your tax deferred and a certain amount from your tax-free Roth. Okay, now that we've talked about hardship withdrawal, we're going to talk about the difference between what you can do with your tax deferred and your Roth. So that's pay tax later or tax free because you've already paid your taxes. How do you want that to grow? And this is when you're going to need to take a look at what investment strategies are available to you, ensuring that transfer goes smoothly from your TSP to the receiving account. So start researching what's available, so then that way it's ready to receive. If it goes through you, there can be some tax implications. So you want to make sure that you have the vehicle ready on the other end to just pass your funds from your TSP to either a brokerage account, a tax deferred qualified plan. And this is not financial advice. I want to share with you what I did for mine to kind of give you an overview of what is available to you. There's different brokerage accounts. These are the ones that I found that might be helpful to you. I moved my Roth to Charles Schwab. The reason for that is they do have a platform that really allows you to become active with regards to learning how to trade. They have a platform called Thinkorswim. You can do paper trades, which means it's not tied to your account. It's just practice if you want to do some active trading. And the tools in there are fairly simple to use. The customer service is excellent. They're open 24/7, and they can give you advice, and they have video tutorials to kind of help walk you through some of the process. So when I opened it up, I opened up a brokerage account, which kind of receives the funds, and then I opened up a Roth IRA account. Now, the process of distribution is going through your TSP with withdrawals and rollout. You do your withdrawals and distributions. There's different types. There's total and partial distribution. If you're allocating your TSP funds into a Roth and a tax deferred traditional, it's going to be a partial withdrawal. And then once you go through the process, you don't have to put in a questionnaire, but you do have to fill out your spouse's information. And then the next step would be to put in the location where your funds are going to. So you're going to put in the account information and the address of the facility that's receiving your funds. It says here 6 calendar days once it goes through. And then eventually after that, it'll be clear for you to initiate the fund transfer. Now, the challenge is make sure you let your spouse know to expect an email, because mine was delayed because he didn't check his email. So that's one thing that this is snafu. So make sure that you go ahead and take a look at where you want to put your Roth IRA to. So for my traditional IRA, my CPA suggested, since I have a business and I have an LLC, to start an individual 401k. As a business owner, I can transfer my traditional IRA into a solo 401k and have my business do a matching contribution, and that would be a business expense. By having the solo 401k, it allows me to really fund my retirement. I individually contribute to my Roth, and then my business will be able to contribute up to 20% of the profit that the business makes. So that's another incentive for me to do well. Since I'm over 50 years old, I get an additional contribution amount for catch up. Now, another options besides the solo 401k, what I did with the traditional side, is an annuity. I'm a licensed financial professional, so I'm able to see all these different products and then make that selection. Some of them have premium bonuses that will actually reward you for selecting their product. It mitigates loss, and that's where I'm at 53. I do not want to lose a huge chunk of my money into the market. So setting aside part of it in something that's safe is something that I consider prudent. And then also, depending on the product and the index that you select, there's growth opportunities. It can be up to double digits depending on how well the indexes that's selected performs. Now, part of our practice when we do the annuities is we do an annual review. At the anniversary, we can make the selections and maybe change the indexes. We can also suggest something a little bit better for the client, so then that way we can transfer it to a different product if there is one that would actually cover the surrender charge if they have a bonus high enough. Or the client might just decide, like, this is great. And another reason I like the annuity, it has death benefits and it also has living benefits. There's some liquidity to it. About 7 to 10% of what you have in the annuity, you're able to withdraw annually. Now, the longer you keep it in there, the surrender charge, which means if you decide you need to withdraw, they're going to penalize you for a certain amount of percentage of the value that's in the annuity. As you wait, that surrender charge will get less and less. So those are the drawbacks. Anytime you look at a product, there's pros and cons. Look at the pros to see if it'll meet your needs, but then also be okay with the cons. That's why I only did partially my retirement with the annuity, to just make me feel safe, and then I can set that aside and still be able to access funds if I need it, and then use that fund for something else. And we can talk about that strategy in a different time. So those are the investment strategies I chose and the withdrawal options depending on my financial needs. And then also, when you are thinking about your assets, think about how you're going to distribute it. Think about your family. How are you going to provide for them in case anything happens? If you are married, you have children, you have a house, really start thinking about having an estate plan. You do not want your assets to go into probate, because that's something that's going to make life more difficult for your family. Now, the key takeaway I want you to have when it comes to retirement planning is make sure that you stay informed. Understand where you are right now and what your future state will be. What is the gap? How are you going to fill that gap? And how are you going to allocate the stuff that you currently have? And if you are going to need to adjust so that way you can continue to maintain your lifestyle, how are you going to do that? I'm hoping that you're actually thinking about this years before you retire. There's statistics that show that 7 out of 10 people are living paycheck to paycheck. Most people are not really prepared for retirement. And then over 50% feel they're behind. So learning and staying informed about how you're going to plan for your retirement will make things a lot easier if you're proactive now. And then once you're in it, like I am, make sure you adjust your strategy. Look for different solutions. There's a lot of so-called gurus that are in the internet that's telling you to go do here and don't look there, to only go with this route versus that route. Take that with a grain of salt. Some people will tell you don't go with term insurance, get cash value, infinite banking. And some people will tell you don't go cash value, go straight to term and then invest the rest. The challenge is when we don't look at the whole picture and really understanding what products work for what, we leave a gap. And sometimes it's a really costly gap. And this is one of the reasons I became a licensed financial professional. My mom was left with no life insurance when my stepdad passed away. And it's not his fault. He was sold term insurance and not permanent, and he outlived it. He was 92. So we had to sell our house to be able to fund her retirement. Luckily, we were able to do so, especially in this market, So it was a blessing that God allowed it to be listed for just 2 weeks, and we were able to move her and fund her retirement. Now we're looking at opportunities and options like an annuity with long-term care benefits. By staying informed and adjusting your strategy, you can continue to plan for your future, because we're all living longer. So quality of life is key, and also our health. There's a lot more medical and chronic issues that are coming around. Now, the key part of retirement income planning is also understanding the spending, right? It's not just getting your Social Security, getting your pension, getting your distributions from your individual retirement accounts, but do you account for the cost of medical care? And how will that affect your budget? So these are things to kind of think about and plan for it. Continue to look and adjust. And how will you fund for it? There's so many different ways to do it. And if you want to know more, please feel free to contact me. My information is in the description below. Get on my calendar. And if this was helpful, please like and share, especially for people that you know that are getting ready to retire. If you want to learn more about retirement life and how I'm going through it, and any lessons that I can share with you, plus my entrepreneurial journey, please subscribe. Thank you for watching.